every time I mention a PD array, every time I do that, it's simply me giving you a reference point, like I mentioned here on this one, talking about the volume imbalance, just like I was calling it live in yesterday's market review. I was talking about very specific things. Watch the reaction to price. And what you're doing is you're measuring, does it respect that? Now, what would have happened if it would have traded through it? Am I going to go into a tissy fit and say, oh, and huff and puff and be mad because it didn't respect that PD array? No, I'm taking that as insight. I'm reading it, internalizing it, and saying, okay, it went through that one, so what's the next one I have to be watching? Because if it breaks through 3 of them, then I'm probably not on side anymore, and my interpretation of order flow is not accurate. So if I have a stop loss that's likely to be hit, I can do what I did today and neutralize it and not let the stop be hit at all. Now see what we're doing here? We're trading up into this area, which is what I said I didn't want to see it do. Because it's doing this and trading up into here, my eye is right here at the mean threshold of that candle, this up close candle. So for specifics, I can't tell if it's a 5 or not. Old eyes. Yeah, 4107.50. If it goes through that, then I'm probably going to close the trade and be content with it. And that's that. So these are the things that plague me as a trader. I'm wanting to see certain things be given to me at my exits. Let's go back down then. Now, what happens if it goes down and hits my level and keeps on going lower? So that's the part that I don't feel frustration for. It's when I'm really trying to key up on, like what I was doing in front of you here, managing and trying to get the levels that I wanted for precision. Closing the trade because it doesn't any longer hold the likelihood of delivering like I want to see it deliver. That rule has served me more and better than me trying to be finicky and try to finesse my exit strategies pursuing perfection. Meaning that if I'm in a trade and I'm looking for something to indicate to me that I'm probably no longer in a move that's going to sustain and continue to my objectives, this still could do that, and I'm okay with it, because there's many times where I would have discounted that whole idea of saying, okay, if it goes through that mean threshold here, I'll be willing to sit through it, and it might do what it's doing right here, and then all of a sudden go the other direction. And then I would be really upset with myself that I knew better, but I didn't engage on that. I would be mad about that. But I don't get mad about me doing this, closing the trade because it's now meeting a criteria that means that I have been hurt in the past by not sticking to that rule over something so insignificant as a move from where it was and trying to get down to my objective. So it looks like it might hit that 40.98.50 level. So reading and interpreting each individual PD array helps you without having to have any kind of like depth of market on the right hand side. Neither there's ladders and such, or volume profile. You don't need any of those things. You just need to see, does price continuously keep offering resistance in the form of the PD arrays, the things that would key up a new trade, not necessarily that we're taking a trade or that I'm entering on a trade, like the volume imbalance that was mentioned here. Watch that. Did you hear me say go short? Now some of you probably went short there, and you probably already took profits based on the lines that's already been here, me closing my trade, and you probably mimicked that, and you're doing everything wrong. But every time I mention a specific element of price action and the things I'm teaching you, you're looking at that and seeing how does price react to it. Now, the reason why I'm teaching this and teaching this way of doing it is because you don't know, I don't know, which specific model or approach and what is your multiplier going to be. What's the PD array that you're going to use continuously more than anything else? Is it really a fair value gap, even though you probably have warmed up to the idea because of what I shared and what people are making money with now? But that might not be the one you settle in on. It might be a volume imbalance. That's your pattern. That's the thing you look for. That's the thing that gets you in a trade. But you won't know that until you do what? Have someone that's going to be identifying them real time, whether it be like this or whether it be on my Twitter feed where I'm calling out the specific candles, saying, okay, note this one, pay attention to this one. That's not an invitation to buy or sell. That's not what that is. Clearly, you can see if I want to tell you I'm going to be in a trade, I did it today. I don't want to do that part because you're not going to learn anything from that. By watching price and seeing which one of these PD arrays, breaker, order block, fair value gap, optimal trade entry, institutional order flow entry drill, mitigation block, whatever one that you see when I call it out, it will repeat over and over again. The ones that you see clearly, that's easy. Oh, I saw that. I was looking at that. I knew he was going to mention that, referring to myself when I'm talking about it. Then that's the one you're probably most suited for. You saw price trade up into this fair value gap. Let me move it away so you can see it. This candle's low, this candle's high, and this candle passes through between the previous candle's low and the next candle's high. There's no overlap of this candle up inside that range until we get to here. So that little shade area that I put on my charts that my students do now too, that little area is where, if you were looking at a paint roller and the paint roller applies paint to the wall, rolls down, this little area is like a pocket of where the paint wasn't really thick. It wasn't evenly distributed to the wall, and the wall would be like this chart canvas. Okay, if there was no charts on this at all, it would be a blank canvas, like a wall before the painter puts the roller and delivers the paint on the wall. Well, as it drops down like this, from here to here, this is where, like when you take that roller, if you ever painted anything or watch a painter use a roller, when they first apply that roller to the wall, the paint is really thick. It's ample. It's delivered abundantly to the wall. And as that roller continuously rolls in the direction it starts rolling in when you first apply it to the wall, eventually there'll be small little porous little pockets where paint did not distribute to the wall. So the surface of the wall will have what? Little spots. And that is much like what we're seeing here, where the paint comes in, it applies to the wall, keep going down. But now if you look back, there's a small little area here where in an ideal world, the painter would take that roller, apply more paint to it, and then do what? Roll back up over top this little area and this little area. And then he can move on to another area of the wall where he hasn't painted yet. Does that make sense? To me, that makes sense as an analogy, because if that would have been taught to me when I first learned how to read price action, it would have made a whole lot more sense versus overbought, oversold, what swing high is the real one with divergence, and what trend line do I use, what's my moving average settings, what RSI settings should I have my set on, what do I use, MACD, a histogram, or do I use the moving crossovers? All the stuff that was a waste of my time, these are the things that would have been more beneficial to me, which is the nuts and bolts of price action. So looking at where the market can go back in and do what? Replenish paint to the canvas. Put more paint back in an area where it needs it. So when you look at price action and you identify these little areas like this, you think it's going down here. See, the painter needs to paint down to this level here. To finish the job, the price run, the algorithm will want to go down there. But it has to do what? It has to deliver the market efficiently. Otherwise, it's a straight line like CPI. When that market data comes out, what happens? Market's just doing nothing until CPI number. All of a sudden you have a vertical line. That's it. That's it. It's all you have is a vertical line that keeps expanding. You can't trade that. You can't do anything with it except for regret that you were in the trade. It's not going to respect your stop loss. It's going to laugh at you. It's going to literally make you feel like you're a fool and you should have never done that. And you should feel that way because the CPI is an absolute freight train. Like you're literally trying to play chicken with a freight train. It's coming right at you. Hit me. It will stand on those tracks. It will do that and drag you for miles, okay, until your account's gone or you lose your sanity. So you have to know where price is going to go. Much like the painter, when he looks at that wall, wherever he's going to start with, whether it be the left side of the wall, the uppermost part of the wall, or the lower part of the wall, wherever he starts, okay, that's the point of inception. When he puts that paint on the wall, now his job's begun. Now he has to paint the entire surface. Just watch anybody. Just go on YouTube, say painter using a paint roller, and you'll see exactly what I'm talking about in an analogy where, let's assume for a moment you're starting on a wall in the lower right hand corner and you apply the paint. You put on the wall, maybe at the top end, you start there instead of the bottom. Top end, you apply the roller and you drag it down over the wall. The first 12 to 18, 20 inches of the surface of the wall has a beautiful delivery of paint. It's thick, there's no pockets, there's no porous little parts that got to go back and roll back over top of immediately. You just roll until what? You feel like you're not getting any paint coming out anymore. So what does the painter do? He rolls right back over that same pathway to gather excessive amounts of paint that's not necessary to be in that same area. So it's going to collect more paint, evenly distribute any areas that have these little pockets where paint hasn't been distributed. So it reapplies in old areas. Yes. What does that mean? In this area here, paint was, or price was offered both directions. So from this candle's high and this candle's low, the next candle opens up here. It trades back down and runs over top of what this candle's low was. And then it rallies all the way back up to this point. So it leaves what? It leaves this little area as a hole or a pocket where price did not go back over, where it went down in between this candle's low and this candle's high. This is inefficient. This right here is an inefficiency in price delivery. Price operates on a price continuum. Okay, and it's a efficiency continuum, meaning that the market has to continuously offer fair value, and fair value is evolving all the time throughout the day. And every time it creates an inefficiency like this, it will seek that and go back up into it. Now, it will over deliver just like a paint roller will. The painter will roll back over areas where it's already had paint delivered to the wall, right? You've seen that. There's no way to do what? You can't just paint one little pathway on your wall and then come over to the left a little bit and come back down and not overlap. You want to overlap. And that's exactly what's occurring in price action, because look at the range in between here. This candle's high and this candle's low. The market has traded down and it also traded up here. So in this little area here, on a micro scale, this is a small little balanced price range. When the bodies of these candles came back up into this fair value gap, identified with this little area right there in price, that little segment right there, look where the bodies go. See where it stops? The closing price on this candle is 4116.75. What's the low of this candle? 4116.75. That's perfect. That's a signature that shows you the market's algorithmic. Retail logic, nothing out there says trade with these levels like this. Because if they did that, if they knew that, they would tell you where to put trend lines at. Whereas right now, up until this moment at the time I'm talking, nobody tells you what specific price levels to drop a trend line on. If you ask 1,000 different traders, if say we had a live, like a session where I was in front of a stadium of people, I don't foresee me doing this, but let's just, for the sake of argument, say that's what we're doing here. And I said, okay, everybody raise your hand if you know how to use a trend line. Of course, everybody's going to raise their hand. So yeah, this is what we do. And say I threw out a beach ball, 3 or 4 beach balls, and we bounced around until the music stopped, and whatever the music stopped, whoever had the beach ball in their hand, they get to come up on stage with ICT. And I say, okay, here's a chart. You all have the same chart. You can't look at each other. Can't copy. Draw the trend line that's most important to you right now. What do you see? And they're all going to be different. And you wonder why retail traders are inconsistent. They have no premise behind finding consistency because they're constantly doing something different and not maintaining a rigid approach with rule-based ideas. My rigid approach to rule-based ideas are my PD arrays within the context of market structure, within a bias that's been derived by a narrative, which is also leaning heavily on a higher time frame premise, which is a weekly chart. I'm doing the same things all the time, but the things I'm doing are very specific, like knowing a very specific level. This candle's low, 4116.75, happens to agree with the closing price on that candle. What's the next candle's body? It's the open. It's the same thing. The open price is 4116.75. Now, just like that paint roller, when it delivers over top of old areas where it has delivered paint, watch the painter, they overlap over it. Why do they do that? It makes sure there's no seams. It buttons up everything. It completely smooths out and feathers the edge of an old run on paint being delivered to the wall, and then you apply it back over top of it just a little bit. Kind of like when you cut the grass, the lawn, you cut the grass and you come back over, and you're not trying to line up where the edge of the last pass with the mower was. You're going to overlap it a little bit. Why? Because you don't want to waste your time going back there again, right? Well, that's why the algorithm is coded this way. It wants to efficiently go back and reprice. So you'll see these little areas here, which I'm going to borrow this now. This area here is where this candle's low. Let me take it away a little bit further and you can see the difference. So this candle's low. Right here, this candle's low, and this candle's high. High and low. It's passed back and forth between that shaded area, both directions. So when we have this pass back up into the actual fair value gap, that low to that high with this one single candle here, my eye is trained to look for that in price. I'm teaching my students to look for that too. You're going to try to enter in that. Where? Going short at that candle's high or the midpoint in between. You can, if you really want to try to be a precise, fanatic, you can try to get the fill at the high end, but many times I've tried to do that and it doesn't go there. It leaves a small little portion open. In this case, what I'm illustrating here is the efficiency of the algorithm coming back into an area that's already balanced, but it's covering up and overlapping an area where it's already traded to, which is why you're getting this and this. That's not an error. It's not a deficiency on precision either. It's just making sure there's no seams. Everything's been offered efficiently, but the bodies tell you the real story. This is where the damage is done, the wicks. But the real narrative and what price is doing is you have to study the bodies. That's where the real storyline is. And you can see how it comes right up into there and stops. This part of these wicks, okay, you have to accept the fact that your trades are going to have that much drawdown. If you're entering in here in consequent encroachment, okay, in this range here, we have what? It's balanced. It's done both passes. This candle went down to this low, and then this candle opened here and then went up this much. So I'm not worrying about all this here. I'm saying the difference between this candle's low and this candle's high, those two ranges present a range of price action that has, in this interval of, what is it, 4 minutes? Each candle's 2 minutes. In 4 minutes, price has gone back and forth in there. And you're going to hear other people say these lower time frame charts are noise. They're not noise. It's telling you what price is doing. Whether you're looking at this chart time frame or if you're looking at an hourly chart or a daily chart. If you're staring at a daily chart, is the daily chart, if you watch it from the time that the market's open at 9:30 to 5 o'clock when it closes for our hour session of dead time, if you simply watch price on that daily candlestick versus us watching it on a lower time frame, is price doing anything different? It's doing the same thing. It's this you're doing the same thing, but we're using the benefit of a time-based chart. And you're going to get goobers out there that are going to tell you time-based charts don't work. Time-based charts don't work if you trade retail logic. That is true, but I don't trade retail logic. We don't trade retail logic. I'm teaching you how to use time-based theory to identify what the market algorithm, okay? There's only one algorithm. That's the price engine that delivers this. You're never going to convince anyone, especially in this community, that these things here are being met because buyers and sellers that use retail logic all come together, and through sheer coincidence, it just happens to be perfect. Come on, it's no. I don't even want to entertain that anymore. When I see people comment and say that stuff, I immediately mute them. I'll never see another comment from that person again. You're not being blocked from my Twitter feed, but I just don't want to hear from you because you're literally closing your eyes, putting fingers in your ears. No, you don't want to hear it. Okay, I don't want to see your nonsense because to me, all it's going to do is trigger me. I can't stand seeing people deny the evidence laid in front of them. It's right in front of them over and over and over again, but they won't appreciate it because it flies in the face of whatever they believe is the real things. And the things that they're holding on to probably isn't even this precise, which to me is madness. But I'm becoming a little too dogmatic here. Let me dial it back. So we have this overlapping into this area. What is this entire range? From this low to this high right there. Watch this. There's our fair value gap. Now, if you know that the algorithm is going to do the same thing you're going to do when you cut your lawn in the springtime when the grass is growing, you're going to go out there with your mower, or the guy that you're going to hire to cut your grass for you like I do, because I ain't cutting shit. The overlapping of that mower, where you just pass through, cutting the grass down, the first pass, then you're going to turn the mower around, or they're going to turn the mower around, and they're going to lay their wheel over top of what was already cut. So that way there's no seam, right? So when you make a new pass, you're always cutting through, and not leaving that little segment of grass where you got to go, oh, I left a mohawk. Got to go back in here. My sons, the few times I've asked them to do the lawn, they hate it because they know my obsessive compulsiveness is going to force me to go to the window and see what they're doing. And I'm waiting for them to leave a little mohawk in the grass. And as soon as I see it, I'm out there. Hey, go back and get that. And they flip out because they thought they were going to get away with it. But you can see it. You can see it in the grass. You don't want to leave that. So that's what these little things are here, preventing any little mohawks in the lawn. I know I'm giving you all kinds of analogies, but this stuff makes sense to me. If it doesn't make sense to you, then, I'm sorry. But if you look at that balanced price range between this candle's low and this candle's high, there's our target right there. Screenshot that. And that's the level I told you here too. Pretty cherry picked, isn't it? ICT, you slay me. The range between this low and that high, if we measure that and you get a midpoint level, that is mean threshold. Why? Because we're measuring candlesticks that have bodies. If it were a gap like this fair value gap, the midpoint is consequent encroachment. Consequent encroachment is what is permissible within a range. Let me make this a little bit smaller. See if we get that 9850 level I mentioned on Twitter. Because I feel like a peacock if it hits that. My wife's going to see me doing the Mick Jagger walk. Got my moves like Jagger. Don't worry, I'll come back up to that balance price range in a minute. Some of you already figured out what I'm going to go and talk about in a second. Come on. All right, we'll give it time to cook. So over here, we have 4,117.50. It just so happens, randomly, with buying and selling pressure being as it is, completely random, How far can it overshoot this fair value gap? Well, what's the midpoint between this candle's low and this candle's high for that balanced price range? 4,117.50. What's the high on this candle right there? 4,117.50. Whoops. So it takes more of a religious faith-based madness to believe that all these things that I'm teaching you, okay, all these things that I tell you to go in and look and see if they're really in the market, if they're really in the marketplace, it begs the question, how the hell does it keep happening? How does it keep happening? See, these are the things. I was sitting in my aunt's bedroom after working 13 and a half hours a day, doing a 45-minute commute in 20 minutes, speeding. I guess I was breaking the law. Never wore seatbelts either, and I rarely wear one still today. But I'm a rebel. I would sit in there and I'd look at these charts, and I started looking at these things and these turning points, and I'm like, what happens continuously all the time at these turning points? And I started seeing this in the bond market, in the S&P market. And then I said, well, let me see if it occurs in the currency futures. It was. It's there. So I said, okay, I need to know. Did I see something I'm not supposed to see? So I took all of my money. Every time I made new money, I would buy more books and more courses and more books and more courses. And for the yahoos out there that say that I have rebranded things, old terminology rebranded with new terms, this stuff is in no books. No other author ever talked about it. It's never been touched on until I've said it. Which is the reason why I challenge every one of my viewers. And watch, it's going to hit our target here. One of those, I told you so moments. Oh, look at that. That's so random. Acceleration down. I told you we'd probably get a big down day earlier in the day if we get through that new week opening gap. So I have a lot of fun. I'm not beating my chest. I'm just thumbing my nose at the people that like to say I can't do this, that these things don't work, and it's cherry picked. And I had a small win when I had the win of the day. I called everything. You've seen it. It's here again. I want you to learn, but if you can't get out of your way of your own ego and your pride because you don't know this and you can't do it yet, and I'm probably killing your business because you can't sell your stuff anymore and you're getting on your live streams and losing $15,000 of fake money but calling it live. I get it. It's a struggle point for you, but I'm not trying to be your adversary. Just learn from me. You don't ever have to mention me. I just want to see you do better, and you don't have to communicate to me. If you want to keep it in private, that's wonderful. I just want to see all of you do well, not get hurt, because these markets are not random.